What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a very volatile sell-off in the market and there's going to be very critical levels tested in this market. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did have a very volatile sell-off today and we did see an increase in volume on the selling. So this is the real deal selling. And you probably already know that by now because we did see SPY going down over 2% today. Remember yesterday's close, we were still trading above support at that 412 level, but we did get that early warning sign that things could be breaking down because we did get a price action close below that 20 simple moving average. Remember, we did gap down, so there is a gap that will likely get filled above the price action that will close on SPY levels of about 417. Now also don't forget that we do have a gap below right around $400, which also has not been filled. So right now, it does look like we're closer to filling the bottom gap than we are to filling the top gap. This is going to be a battle of the gaps to see which gap gets filled first, but right now it does look like the bears are taking over control and they do want to come down for this $400 gap. Looking at the price action, we could see a huge bearish candle and we did close very close near the low of the day, and we did close just below that 50 EMA, which is right around 405.80. We also have this little bit of a support trend line, which is also right around that same area, and we did close very close to those levels. But right now, that is a breakdown, just like we had the breakdown below the 20 simple moving average, which does increases the probability we could likely come down and close this gap right around 400. So be very cautious when you get selling like this. It's called a falling knife, and you never want to try to catch a falling knife. You want to wait until some support level holds up, and you want to see these candlesticks get a lot smaller, which means the volatility is leaving the market and some sort of a support level is building. Also remember, in volatile markets like this, it's a great opportunity to be a trader, but you still need to have a very strict trading strategy, and you need to make sure that you understand what the strong levels of support and resistance are. You can make money in markets like this being a bear or a bull, and you're looking to short off the resistance levels or buy off support levels depending on which side of the trade you're on. Bears want to short at resistance and cover at support, and bulls want to buy at support and sell at resistance, and make sure you're following a very strict strategy because you don't want to get caught holding a trade during a falling knife scenario. So right now the critical levels on SPY are right about where we closed, right around 405.60, the top of the gap at 403, and the bottom and closing of the gap right around 400.6. We will have upside resistance right at that 50 EMA just above, right around 405.80, and we also could still find resistance on the way back up at 408 and 412. 412 is by far going to be the strongest resistance level because that's where we had the most support tests, and a strong support level usually becomes a strong resistance level on the other end of the trade. But do remember, we have the gap to fill right above 417, so if SPY can get back above 412, we'll be looking for a retest of that gap at 415 to 417. Also note that the bullish trend was broken today and we saw the 5 EMA and the 13 EMA crossing below that 20 simple moving average. The 20 simple moving average is also no longer positively sloping, so we officially did lose the bull trend, and the bulls no longer have the benefit of a bullish trend to send the price action higher. So as you can tell, SPY is in a very similar situation as the triple Qs, even though the triple Qs did get a head start on the correction. SPY is now in a very similar boat without any trending to either direction, and it's at very, very critical levels. If SPY starts closing too far below 400 and getting back below 398, it is possible SPY is going into a bear market. So do understand that this is a very critical moment in the stock market, and if we start seeing SPY breaking down below 398, this could have been the beginning of a top and a potential start to a bear market. So take this sell-off seriously, and this is not the time to be playing around with leverage and not having a trading strategy. Next up is the NASDAQ 100 triple Qs, and we see the NASDAQ also having a very bearish day today, going down over 2.5%. The NASDAQ 100 did close below that support level at 320, and it's currently sitting on our next support level right around 316. Don't forget that if 316 breaks down, we have a gap to fill just below at 315. Right now, the number one thing I'm watching for on the NASDAQ 100 is an ABC correction. We are definitely in a correction on the NASDAQ 100, and the first level of support we were looking for this to possibly bottom out was 320. As we can tell, 320 did not hold up. So that means the next level for this ABC correction is right around 316, and we did close above that level today. However, we did not get any confirmation that that level is going to hold up, so we need to watch it very closely going into tomorrow's trading session. If 316 breaks down, we're very likely going to have a quick path all the way down to about 309.80. So do know that we are possibly finishing out this correction, but there is still plenty of downside support levels that we could test before we start going higher. Remember, it's called a falling knife. and you don't want to try to catch a falling knife. Wait for the confirmation that we did hit a bottom, and we'll know we hit a bottom because we'll see price action bouncing off of that level, and we'll start seeing a bullish trend start forming back yet again. Looking at the moving averages, you can see that there's no bullish trend, and all of these moving averages are starting to negatively slope, and they do look like they're trying to go into a bear trend. They're not yet in a full bear trend, but right now, the longer the price action stays below that 50 EMA right around 328, the more likely we could be developing into a bearish market. So watch the critical support levels very closely at 316 and 309 because those are going to be the key levels that could be the end of this correction. Now, as far as upside resistance levels go, we still will have resistance at 320 and right around 324. The strongest resistance to this market is still going to be the 50 EMA because we are trading underneath that level. That level is going to be right around 328, and the first sign that the bulls can get back above the 50 EMA could be the first indication that the correction is likely over and we could be trying to go back for another leg higher. Remember, in the weekly charts, we're still in a bull market, and after a correction, we usually resume the bullish trend. If I switch this over to a weekly chart, even though the week is not yet over, we are still in a bull trend. So if we can close out this week back above that 20 simple moving average at 324, it's still in the higher degree of bull market, and that means after the correction on the daily chart, we could go back into a bullish trend. So you just have to stay disciplined and you have to watch the critical price action at these levels. And remember, we still have 2 trading days left in the week and a lot can change. So going back over to the daily chart, watch these critical support levels very closely for a potential bottoming out of that wave C, which could indicate that the correction is over and we could be trying to go back for one more leg higher. Next up is the Dow Jones, which also dropped over 2% today, and the Dow Jones did break 2 critical support levels. The first critical support level was at 20 simple moving average at 341, and the second critical support level was at 337 level. Right now, the Dow Jones looks like it wants to retest that 50 EMA right around $333.50. We do have a gap below that will fill right around 331.70. So just like we saw on the S&P 500 and the triple Qs, the first indication of price action closing below that 20 simple moving average is a warning sign, but at this point, the price action already cut through 2 critical support levels, and we're now looking for the next level right around 333.50, which is at 50 EMA. So upside resistance on the Dow is now going to be 337 and 341, and as you can tell from the trend, it's very unlikely that the Dow Jones stays in a bull trend going into tomorrow. It is still possible, but the price action would have to climb all the way up from the lows, all the way back above 341 to 342 to possibly maintain that bullish trend. So keep in mind, we did hit our price targets up here at 347 and we did touch 350. So it is possible this is triggering a stock market correction in the Dow Jones, and we need to remember that this could still be a falling knife scenario. We're seeing increasing volume on red days, which does mean that there is definitely a lot of volume behind this selling, and that could mean that we're going much slower. So watch the critical levels very closely at support. Next up is the Russell 2000, which got obliterated today, going down over 3%, and it did close below that next critical support level at 215. The next levels of support on the Russell 2000 are at 209 and our support trend line right around 206. Upside resistance on the Russell is going to be 215 and the breakout of the trend line right around 219 and the 50 EMA at 221. The Russell 2000 is building up some bearish momentum and some bearish trending, and we can see all the moving averages are negatively sloping. Next up is the ARKK ETF, which went down over 3.7% today, and the ARKK ETF could be coming back down to test our support level at $96. Upside resistance levels are going to be 106 and 109, and remember that ARKK isn't a bear market, it's in a full bear trend, and it's trading below all of the moving averages. So the next possibility to trade this ETF is going to be on a possible bounce and successful test of support at $96. Next up is the VIX, which is our fear indicator, and we see a ton of fear coming into the market today with the VIX going all the way up to 27.6. It blasted out of that breakout level and it did close above resistance at 24.8. And this is one of those VIX levels where you're going to see a ton of volatility. Remember, the VIX over 20 was a warning sign that we could be going into a stock market correction, and we did see that warning sign flashing yesterday, and we did see a follow through with that today. Remember, this was a Bollinger Band squeeze and it did fire to the upside, and you can see how rapidly these Bollinger Bands are expanding today. Now there's still hope because after the VIX squeeze does fire, it could just be a couple of days of volatility, and eventually the squeeze could end and we could see volatility leaving the market yet again. So this fear and this volatility could be a great opportunity to start accumulating some of those long positions and getting them at lower prices. But remember the falling knife rule and wait for critical support to hold up, and then you want to buy it on the bounce, setting your risk level at support. So right now the VIX is telling us to expect plenty of volatility, and remember the VIX needs to get all the way back below 20 before we're going to see a sustainable bull rally. Next up is gold, and we see gold going down over 1% today, and it did not hold up at that support level at 1829. At this point, we could be looking for gold to come back down to retest that 20 simple moving average right around 1791. It's also possible we come back down and retest that 50 EMA at 1776. Upside price targets are still going to be 1829, and a break and close over 1829 means we could be going up for 1876. Next up is silver, which went down over 2% today, and it did close below that 5 EMA after failing to break out above our price target at 27.6. Support levels on silver are going to be 26.5 and 26.1. Upside resistance levels and our price targets are now 27.6 and our resistance trendline breakout at $28. Next up is Bitcoin, which is currently down about 4% and trading below that support level at 55,600. Bitcoin is trading below all the moving averages and it's below support, but it is a very volatile asset and it's still hanging around this level. So right now, the next support level below on Bitcoin we need to watch is 48,000 and 45,000. And remember, if these levels break down, Bitcoin could be going back down to 30,000. But right now, I would not panic about this. It's really just consolidating, going sideways around 55,000. But it is possible it could turn into something worse, so watch the critical support levels. Upside resistance on Bitcoin is now going to be this level at 55,600 and the 61,000 breakout level that Bitcoin still has not tested. Next up is Amazon stock, which went down over 2.2% today, but it did hold up above that support level at 31.37. Amazon is definitely cooling off after that monster run up into earnings, and we do have critical resistance levels above at 32.08 and 32.60. Next up is Tesla, which did break down below support today, and we did have that support level at 594 breakdown, which means Tesla could be coming back down to 557. Upside resistance levels on Tesla are going to be 594, 618, and 669. Next up is Apple stock, which dropped about 2.5% today, and Apple stock is still in that no man's land where it's still above that support level at 119 and below that resistance level at 126. So look for Apple to potentially continue to fall until it gets to support at 119, and it could bounce up and try to retest support at 126. Apple does have a gap above that won't fill until about 126.88, and we will have critical resistance at that 50 EMA right around 128.6. So Apple is definitely building up some bearish momentum as it continues to head lower, and it may need to bottom out at support at 119 before we see buyers stepping back in. Next up is the financial sector, which dropped over 1% today and closed right on top of that 13 EMA. The financial sector is still in a bull trend, but the price action is closing below the 5 EMA for 2 days in a row. Next up is the industrial sector, which dropped 2.4% today and did close below the 20 simple moving average. The industrial sector is still in a bull trend, and it could start bouncing as soon as tomorrow, or it could be coming back down to retest the 50 EMA. Next up is the healthcare sector, which dropped 0.94% today, closing back below that 20 simple moving average, and we can see that the bullish trend is in jeopardy now. Watch the healthcare sector very closely because if it loses the bull trend, it could be coming back down to retest that 50 EMA. On the energy sector, we went up about 0.5% today and closed right on top of the 5 EMA. The energy sector is still looking very bullish, as we can see with the bullish trend here, and the price action is still hanging around that 5 EMA. So going back to the S&P 500, we can definitely see some weakness in the sectors with the price action, even though we do still have bullish trends in the financials, in the industrials, and the energy sector. So right now, this is definitely a falling knife scenario, and it is not the time to be taking on too much risk. Remember when the VIX is elevated, to expect a lot of volatility, and this could be a great time to be a day trader instead of trying to hold too many positions. So manage your risk accordingly and try not to take on too much leverage in a market like this. Remember, on the Stocks Channel Discord, I'm giving intraday updates and analysis to help you navigate this volatile market and help you stay on the right side of the trade. I'm also going to be bringing a lot of trade ideas because this volatile market is opening up a lot of opportunities. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking on the link in the description of the video. So next up is our trade idea, Disney, and we did see Disney getting caught in the sell-off today, going down over 2%. Disney did close below support at 170.8, but that's only 1 day below support, and if we set our risk below that level, we're still going to be holding this trade going through earnings. So yes, it is risky to hold a trade through earnings, but on a stock like Disney that's been very beaten up and consolidating for this long, I do think that the risk is still worth the reward, and I don't think there's too much more downside left in this stock with the potential upside reward. So look for upside resistance levels at 181, the breakout at 182, and then we have price targets at 188, 191, and 193.8. So we'll see very soon how this trade's going to play out, and it still could be a big winner after we get our earnings report and see where we're going with this stock. So remember, this volatile market will bring a lot of trading opportunities, and I'm going to be bringing a lot of trading ideas to the Stocks Channel Discord. So if you're interested in that, you can find out how to join the Discord server by clicking on the link in the description of the video. So thanks for watching, everybody. Remember to stay flexible in this market, and as always, I will see you in the next episode.